Good morning once again on our weekly update or weekly market update. Nour, we have a lot of things that we discussed last week, and luckily and actually based on our expectations and our discussion and analysis, we've seen that the market is reacting perfectly to the trend. Of course, we've noticed that the Fed, or actually the expectation for the Fed decreased from basically the investors, so they don't expect the same percentage as before and the three rate cut this year. So now we do understand that we're going to have the rate cut. This is what we are sure about, but we're not sure about the percentage of the rate cut. This is one of the main things that the market is pricing, and we noticed on the dollar index that we're trading now at 102. We're going directly to 101, which is a very strong support as well. And so tell me a little bit about the Fed decision and how would that affect us if they increase a little bit more this September, or they don't increase, or they just increase the 25 basis point. I'm sorry, decrease.
I mean, the markets are basically pricing in 100% chance for a rate cut. And now the question would be, what's the amount that they will decrease? It's no longer about whether the Fed will or will not decrease. They will have to cut this meeting in September. But the question would be, are they going to go into cut by 25 basis points or 50 basis points? So far, it's at least they will have to cut by 25 basis points. The 50 basis point possibility now, it's becoming lower or became lower than last week. Last week, now we're talking about 30% chance. The week before was over 50%, and this was because of the data that we saw.
Because of the data.
The data that we saw this week, or last week, which is that includes, you're talking about from CPI one side. We had also better than expected retail sales. However, just want to point out here that retail sales data are always for the past 12 months. 8 out of the past 12 months have been revised lower and significantly lower, not just lower. So I wouldn't be surprised if we see another round of revisions. But yes, we believe the Federal Reserve will cut rates this time. But for the time being, a 25 basis point is fine, unless from now until the Federal Reserve's decision in September, we still have about a month. There's a lot that could change. And don't forget also, we'll be waiting for the core PCE, and that would definitely have something or a lot to influence the Federal Reserve decision.
And there's a lot of discussion of why the Fed does not decrease the inflation rate increase the inflation rate average to more than 2%, and a lot of discussions regarding that part. Now, so we do understand that the Fed is going to decrease the rate, and this is what the market is pricing. That's why the dollar index is going back, and most of the currencies against it are getting stronger. So we can see euro dollar. We crossed the 110 last week, and now we are 110 and a half almost. We can see that dollar yen as well. We're back on the drop down. We're trading at around 145.45 at the moment.
Yeah, we're down 1.5% today.
Yeah, but the support stays the same, which is the previous low at the moment, and it's we have a lot of room for the previous low, 140, 170. Still have at least 400 pips from where we are at the moment. So that drop, all of it together, and how the market is reacting to this. I noticed from the market that indices are still not reacting properly to this drop. Is it because that the market believes, or the investors believe, that these are developed countries and every drop will basically be supported and you're going to buy back and the rally is going to continue? Because this is what I can see from the market. I don't see a hard recession or something that's going to destroy the market here. I can notice that every time the market drops down, someone or basically the investors and the traders just support it and then pull it back up. Tell me a little bit about the stock market and the indices.
Okay, first of all, nobody wants the market to be destroyed, to start with. I mean, we would love to see a correction, just like what we saw over the past few weeks. But the correction that we saw like 2 weeks ago, it was not in an orderly fashion. It was a hard drop, and the market expectations were massive when it comes to, you know, hard landing, not soft landing. The Federal Reserve made a mistake. The Federal Reserve is too late to cutting rates. All this basically contributed to the large decline that we saw. In addition, of course, the unwinding of the carry trade from Japan. So the rally that we saw recently, or last week and the week before, the recovery, I still believe this recovery might not actually continue for a while. I don't see that we go back to record highs. I would still would say there is more chances for another correction to the downside before we actually go resume to the trend, because it is still evident that the Federal Reserve is late, but it will need more evidence in the coming
That's
weeks.
the thing.
What
Would
is
they
it?
admit it? Because if they don't admit it, they will
The Federal Reserve will
not cut the rate more than 25 basis points.
Yes, here's the thing. The Federal Reserve will have to admit at some point, just like how they admitted when they were late in raising rates, they had to admit it. And at the same time, there's no need for the Federal Reserve to say, yes, we were wrong, but the action of the Fed will tell us whether they were wrong or not. So if they come in September and say, okay, we're going to cut by 50 basis points, that's enough evidence for the market to understand, yes, the Federal Reserve made a mistake, but they won't talk about it. That is a possibility. Or if they did 25 basis point in September, and then they said, well, the next few meetings might be larger than 25 basis point, that's also an action, or that's at least a hint from the Federal Reserve. Yes, maybe we made a policy mistake, and at the same time, we're reacting to it. So the Fed will never like kind of admit in a statement, but they will the reaction or the actions that they will take will give us more clues. So I still believe, you know, the market correction is not over. I think we'll see a little bit more. The possible recession is still there. I would give it a more than 40% chance for a recession in the U.S. Coming in probably, I would say, like next year. But at the same time, the reaction of the markets might be a little bit different than what we saw before.
Landing?
I mean, for the time being, the odds for soft landing is still higher than hard landing, but hard landing odds increased significantly over the past few weeks.
Because we've seen Goldman Sachs, actually, they decreased their percentage this month again, and it was expected. Like we discussed it when they increased it. We were like, yeah, eventually they will decrease it back. This is just like a phase now to push the market.
Sure.
So now I can see a lot of opportunities on the market. There are a few points that we discussed before last week and the week before, and we've hit those points. So euro dollar is still trending up as we discussed, and it hit the target 110. Now we're heading to 111. 110 remains as a support. We need to talk a little bit about oil and gold. So oil, let's start with oil.
It's oil, the star of the week.
Yeah, exactly. So oil went up. We did hit the $80 on US oil. It was a decent trade, and we did a simple correction of 50 FIBO from the top, which is totally normal as a correction. But now we can see that the market is trying to push down a little bit more, and some talks in the market are this is related to stopping the war in Gaza. Of course, the geopolitical tension is deflating in the Middle East, and it's increasing in Russia and Ukraine, between Russia and Ukraine.
That is correct.
How is that affecting the oil, or how can we take a look at the oil for the long term? In my opinion, it's still a good opportunity to buy every support in oil, because we're never gonna stop using oil. So what do you think about that?
We have 1 minute on that. So I would say oil, when it comes to the corrections that we saw over the past over last week, I would say this correction is also it's a possibility that it might basically create a new base before the upside trend resumes. And I would say again, between 70, 79, or even like 78, or even 77, it still would be like a safe opportunity for those who can actually hold for a few weeks going forward. And of course, the data when it comes to less possibility of a recession, that helps oil. The tensions in the Middle East are, yes, deflating, but it's still kind of helping gold. But the most important event, which is basically what's happening in, between Ukraine and Russia, and the idea of, expanding the conflicts because they're using, Western weapons, that might actually include or might be priced in at some point if this conflict actually expands. So I wouldn't be a seller of oil more than I would be interested to be more than like of a buyer. Gold, record high. I have nothing much really to talk about gold, but I wouldn't chase the room. I wouldn't chase the move upside here. You'll always have to expect some sort of a retracement. But from the previous what we saw, basically this is a cup and handle on the daily, weekly chart that might actually target 2,600. That is a possibility before we see some sort of a retracement.
Perfectly. I can't agree more regarding gold. The trend is still up, and buying it at the top is very dangerous. So unless we break, you want to do a small hit and run, that would be fine. But stop loss and should always be there because the risk is much higher when you're buying at the top. So there's much more risk compared to the return that we're gonna get. So this is us for this week. We'll see you next week.
We'll see you next week.
Good trading. Thank you.
Thank you. Thank you. Well, that's most come on. Well, that's good. All right. I'll see you at some point.
See you.
Bye.
Bye.